All right, and we're back to the newest episode of the John Gill Podcast Show. We're super excited here with our next guest. And but before we introduce him, let's go ahead and just give a mention again to our partner, Element Studios. That's EL3 MENT Studios. Go ahead and check them out. They're a full-service premier media production company based here in Chicago. So go ahead and check them out when you get a chance. So we are back with my friend Matt Kozak with Lima One Capital, and they are the country's and the nation's premier lender for real estate investors.
Thank you, John.
Yeah,
Thank you for
Matt.
having me.
Yeah, thanks so much for coming on the show. How's everything coming along today?
Everything's been great. Busy week, but I'm so glad to be here. This is such a fun event. I've been looking forward to this since you invited me over a week ago. So thank you.
That's awesome. That's awesome. Yeah, that's right. We met last week at the Multifamily Summit over at the University of Chicago.
Correct.
You were sponsoring the event as well, right?
Yeah, we had a booth. We had a booth for that Multifamily Summit, which was a great event at the University of Chicago. And I haven't been down in that area in a long time. And what a beautiful campus.
Oh, it's amazing.
Yeah,
it's
it was
amazing.
Great. So it was a great event, lots of traffic, great guest speakers. And actually, I think you were the first person that came to the booth when I was
like
still
to show
setting
up
up.
early.
Yeah, you did.
Yeah.
So that was great. Thank you.
Yeah. Some word of advice for anyone attending different conferences: try to show up a little bit early ahead of time, because that's when you really get to have meaningful conversations with the attendees before it gets really packed, right?
Yeah, you get a lot better one-on-one time.
Right.
Or you can get one-on-one time.
Right.
Otherwise, sometimes you're just standing in line or just eavesdropping and listening to,
Right.
that person spit out their info to someone else. And
Right.
then you have to
Wait your turn.
Yeah, wait your turn and then have them repeat it.
Exactly. So, yeah, want to thank you again for being on the show. And, Lima One Capital, you are doing a lot for, you're providing a very special lending product to real estate investors around the country. And I'm really excited to discuss some of the programs that you're offering. But before we dive into that, let the audience know a little bit about yourself, where you grew up, how you got involved in the industry.
Sure.
And if you can share that with us, that'd be great.
Yeah, I grew up in the western suburbs of Chicago in Hinsdale, Illinois. I actually went to college and grad school here in the city. Went to University of Illinois at Chicago and then Roosevelt University in Chicago. So I've lived in the city for years and years. I've been out in the burbs now in the northwest suburbs. Have an awesome family, beautiful wife, 3 kids, and I got into I've been in the consultative outside business-to-business sales pretty much my whole career since right out of college. I actually was in transportation and logistics, went into mortgages, went back into logistics, and I'm actually now back into mortgages, but on the the hard money side.
Mm-hmm.
So I've actually been with Lima One Capital since August of last year.
Perfect.
Yeah.
Perfect. That's amazing. And did you know that you'd always, is this something that you always wanted to do, or explain that to us a little about that?
You know what? Not necessarily on the hard money and mortgage side, but I've always been in outside sales. Sales, like I said, consultative. That was always been my bread and butter, and that's all I've ever known is just kind of, never really worked in an office. Just kind of give me a phone and a
Absolutely.
laptop and just, either an account list or go find your own accounts and just go, get out there and spread the word, spread the brand, spread the product, and get customers to, drink the Kool-Aid and get excited about it and
Exactly.
and take part of the programs and services I offer. So it's great. Again, that's kind of all I know. So and switching from transportation and logistics into mortgages was it's just different product, a different service, and a different language. But the day-to-day activities, from follow-up to organization, time management, that's all the same. I mean, that no matter what job, what field, it's all the same. It's just different product, different lingo.
Got it. That's awesome. And now going into specifically Lima One Capital,
Yes.
let's talk about the company and how they're making a footprint within the real estate investment community.
Well, thank you. Well, Lima One Capital is, it's like you mentioned, it's the nation's premier lender for real estate investors. It's such a great story of how Lima One, I love telling it. It's how Lima One came to be. It started about 10 years ago by two veteran combat Marines, John Warren and John Thompson. They actually were combat veteran Marines. They fought in the war in Iraq in the early 2000s, were on over 200 combat missions overseas. When they retired, they came back to the States and started Lima One Capital. They actually started flipping houses in the Atlanta area. And back then, there wasn't a lot of hard money or real estate investment lenders out there. So they were having a hard time coming up with capital to do multiple projects. So they actually started their own lending company. And Lima One Capital, this is the best part of the company, is telling the name. Lima One Capital, Lima One was their call sign and platoon name overseas in Iraq. So it was Lima One Company, and that was their call sign. So they named Lima One Capital after that. So they got their start in Atlanta, basically doing zero loans, and now we lend over $100 million a month, and just over $1.2 billion a year. That was in about took them about 9 years to do that.
That's amazing. That's
Yeah.
amazing.
So it's one of those great American success stories. Starting with an idea, a dream, and then just basically hard work. Hard work every day, and it's just growing and growing. We're based in Greenville, South Carolina. That's our operations, our headquarters, and that's where we operate out of. And I'm in the Chicago Midwest market. So
Awesome.
yeah.
So for the audience that doesn't know exactly what hard money is or what distinguishes you from a traditional bank, can you go into detail about what really makes what's the difference between going to a Chase Bank or Wells Fargo versus obtaining a real estate loan for Lima One Capital? What type of client are you working with?
Sure. Well, we work with strictly real estate investors. So everything we do has to do with real estate investing, and our programs range from fix and flip housing, new construction, multifamily, rental units. Why a real estate investor would come to us is more because we're very limited doc. We're basically credit driven, limited documentation, and it's speed. We can close a loan on our new construction and fix and flip, anywhere from 2.5 to 3 weeks, from submission to fund. So, that's the difference. We don't look at tax returns. We don't look at pay stubs. We don't look at anything like that, like a traditional bank. But there is a price for that, if you will. So a real estate investor is going to pay a little bit more in fees and a little bit higher rate, but they're going to get that service. They're going to get that speed, so they can get working on a project. So they can get in there, buy that property, fix it up, rehab it, and then either sell it or hold on to it for a rental.
Exactly.
So,
and I think you said something key, which is speed.
Sure.
And in this market, speed gives you the competitive advantage.
Absolutely.
Myself as a broker, when we're submitting offers, the one who, if you can put on a contract a 3-week close versus a 30, 45, 60-day close, that's usually sometimes the difference between getting the deal and not getting the deal.
Absolutely. And not only the speed, but also that limited documentation. So if you've actually, purchased your own house, through a traditional bank, an owner-occupied home, you'll know that, there's so much red tape that you have to go through. Again, from tax returns to W-2s to pay stubs to bank statements to, God forbid you're on a commission pay schedule. Then you have to average out over 2 years. There's just lots of red tape that come with that, where we, pretty much have about 6 or 7 documents we need to close a loan, and I always joke one of them is a photo ID.
Oh,
So I mean, it's
okay,
it's
so it's not that difficult, right?
no, it's really not. I mean, again, it's 6 or 7 documents overall, and that's about it. So now we do require a little bit of skin in the game from our investors. So that's why we don't offer 100% financing. So we do, it is a risk, but it's we do qualify them and pre-approve them ahead of time. So we've got a lot of great clients in our portfolio.
That's awesome. And a lot of the traditional loan programs out there, like you said, they have a lot of red tape. Especially, for example, there's a lot of new investors that are trying to get in the game using an FHA loan program, and they're going to find out very soon that most of the homes have to be in great shape in order to get approved for that type of loan. These homes, especially here in Chicago, you're going to run into some issues, right? They're not going to be perfect. Yes. And on those conventional or in those different type of loans, the property just won't be approved for that loan product. So you can use your loan programs to also buy distressed properties that are in need of complete renovation. Now, does the borrower have to have experience?
Yes. So, well, actually, no. I mean, we actually lend on our fix and flip and new construction side. We go off of a tier system. We have a tier 1 to tier 5. Tier 1 has never been an investor before. It's their first time. They want to get into the game. We actually love working with first-time investors. We love it. I think about 54% of our business is actual first-time investors. Reason for that is we love, kind of educating them, teaching them to do the right thing, the Lima One way, and educating and molding them into doing the right things. Because we need to make them successful. So our goal is for them to buy that house, rehab it, and then make that after repair value that they're seeking for and make that profit. Because what we want them to do is to sell that house, make their profit, and then come back and do another loan. Then we want them to do that again and then do another loan. And then, then maybe buy one and hold on to it for a rental. Scale their portfolio. That's our goal, is to help them do that and then move into the, multifamily when they're ready. So that's kind of the progression and the game plan. So to answer your question, to go back and answer your question, no, you don't need experience. But the more experience you have, what that'll do is that'll decrease your rates with us, decrease your fees a little bit, and then help with leverage.
Got it. So, okay, that is perfect. And so it's 3 weeks to actually close out the loan. Obviously, that's contingent upon the borrower providing the documents necessary. And if you have an investor that is able to turn around and quickly flip that property, are there any sort of prepayment penalties associated to that loan?
No, not on the construction side or the fix and flip side. On the rental side, there is. When you get into our 5-year ARMs, our 10-year ARMs, and our fixed.
Well, let's go into all of those different products.
Sure.
Yeah, let's actually dive there first, and then we can go.
So I'll start with our bread and butter. Our bread and butter program is, and how our company got started, is the fix and flip. So if you're not familiar with that, if listeners aren't familiar or trying to get into that space, it's simply finding a distressed property that needs some value add, that needs some rehab. They fix it up and then they sell it for current market value. So they're really buying a house way under market value, putting some money into it to get it to that current market value, and then selling it. And usually there's a pretty hefty profit within that. So the fix and flip is our core program. Actually, in August of 2019, we were the first lender to launch to market fix to rent, or you can call it fix to rent or fix and hold. So it's really our fix and flip program and our rental 30 program combined into a single close. So those are the investors that find a distressed property, just like on a fix and flip. They get money from us to do the rehab, to get it to that market value. And what they want to do is, instead of selling it, they just want to hold on to it and get a tenant in there to rent, and then collect a rent every month. and then they'll go and do another one of those and another one. On our Rental 30 program, that's designed for our investors that have it's for refi cash outs, acquisition of rental properties. And we could do single acquisition to portfolios. So we do have clients that might own 5 or 6 or 7 rental units, and they want to take some of that cash out to do other projects. So we'll portfolio those all under one loan, give them some cash out, and then they'll go out and buy some more rentals or buy a fix and flip. And our Rental 30 Premier, that's kind of our really experienced investors. That's when you get into your high level, $500,000 minimum value on single acquisitions, starting at 5 or more. So that's when you get into that $1 million, $2 million, $3 million portfolio of rentals. We have a program for those investors. And then what's really popular right now, our 2 main programs that's really popular is our new construction. That one is just going through the roof right now. I'm just getting, calls, inquiries, deals for new construction, and that's ground up new construction. So we'll help with the acquisition of a lot, and then actually give the full rehabs. If you own the lot outright, we'll give 100% funds to rehab and build that home.
Wow.
Yeah, that's if you own the lot already. If you don't own the lot, we'll help with 90% of the purchase of the lot, and then 90% of the construction funds on the new construction. And that, again, takes about anywhere from 2 to 3 weeks to close.
Interesting.
Again, based on the appraisal, based on, getting your docs in on time. And then our last program, which is very popular, is multifamily. So our multifamily starts at 5 units and goes from 5 units to really there's no limit, but our niche is that 5 unit to 200 doors with a minimum loan size of $250,000 up to $10 million. So what's the difference between our multifamily and our other programs is our other programs are 1 to 4 doors. So our multifamily only starts at 5. So if you have a 2 flat, especially here in Chicagoland, there's a lot of 2 flats, 3 flats, 4 flats. What's nice about those is they'll fall under the guidelines and the rates of our single family programs. So you won't hit that multifamily underwriting and guidelines and fees till you hit 5 doors and above. So it's nice. So sometimes that language is a little bit misconstrued in the business. You might hear someone saying, "Oh, I'm looking at a multifamily," and I'll say, "Oh yeah, how many doors? Oh, 2 or 3."
Right.
And I'm like, no, that's
right.
And this is all good for that investor, because they don't have to fall into that multifamily, that multifamily bucket.
Right.
So it really helps out the investor.
And they're able to take advantage, obviously, of probably stronger loan to value ratios, and because
Definitely.
you might have mentioned it, but I didn't catch the LTV restrictions. I know on the new development, you can do a 90% on the purchase and 90% on the construction if you don't already own the land.
Mm-hmm.
And what about on just your regular fix and flip? You said they need skin in the game.
Yep.
Earlier.
So our fix and flip program will offer up to 90% of the purchase price of that distressed property. And then we'll also offer up to 90% of the rehab costs.
Okay.
So we're lending pretty much, 90% of that project. A bulk, pretty much the bulk of that project we're lending. So it is a risk, and that's why some of the rates start out, our rates for a tier 1 first-time investor is going to be 11.5%. Now, it's interest only, so that's one thing. A lot of people might get scared or a little hesitant or apprehensive on that 11.5. But as soon as I say interest only, I could see their shoulders kind of, shrug back down, going, "Oh, okay, interest only." That's good. So, and then as you move up in tier, meaning as you move up in experience, that rate will drop.
Got it.
And drop significantly too. I'm talking by each tier is, about a point to a point and a quarter.
Wow. Fantastic.
Just by showing or doing some other flips or holding on to some properties for rentals. I mean, so put it this way: our tier 1 is 0 flips. We look back our experience the last 36 months, If you've never done any flips or any kind of investing, you're automatically a tier 1. If you do one loan, whether it's with us or with anyone else, just one loan that you can verify, you automatically jump to tier 2. And that tier 2 drops from 11.5 to 10.5% interest only.
Amazing.
So yeah, they're great programs.
And the appraisal process, you said you can close in about 3 weeks. When most appraisers are getting ordered on usually like the second or third week or fourth week.
You know what?
How quickly is that process? I mean, do you have
So especially when I work with my clients, is I do everything in my power to submit a complete full package to my operations. And so that's a little bit work on my end and upfront with my investor, basically doing the due diligence of getting all the documents that I know that my team's going to ask for. Is I'll get that ahead of time. So then when I submit that loan, then I can honestly and set that expectation and realistically say to that client that we're looking at 2 to 3 weeks because I have everything that pretty much our team's going to ask for. The only thing that I let them know up front is that we're at the mercy of the appraiser.
Of course.
But when I submit a package, the two things that trigger an appraisal order for us is that purchase contract and that rehab budget. Well, those are the two first and main things that I get from my borrower. So when I submit a loan, usually that appraiser's ordered either the same day my analyst gets it or the next day.
Got it.
So, and when I say we can close a loan anywhere from 2.5 to 3 weeks, those 4 or 5 days difference is really just how fast that appraiser, I can order the appraisal today. And that appraiser might say, depending on which metro, because we lend in 43 states across the nation and counting. So we're pretty much a national lender. So depending on where that loan is, bigger metros have a lot more action and they're busier. So, we might get an appraiser that says, "Oh, I'd love to do this project. I'll get out there, but my first available day is Friday." So right there, if it's a Tuesday, we order that, and he or she says we can't get there till Friday. Well, right there's 3 days that the loan's gonna sit idle.
Sure.
Okay, and then it's how fast that appraiser will actually do the appraisal, do his due diligence, get the paperwork, and then get it back to us, and then it goes through our approval process. So some appraisers get stuff to us the same day. Some take a couple days, so that's why I kind of set that realistic expectation of anywhere from 2.5 to 3 weeks. And then if there's any issue on title, that's the other holdup. Those really are the only two things that'll make or break a super fast closing, which is out of Lima One's hands.
Well, yeah, if you have a title issue, that's going to be on the sellers too. They've got to clear that up.
Exactly.
So that's going to definitely be on their hands. The other very important thing to mention is, the appraisal is something, for those that don't know, usually kill many deals in this business. So that's why I specifically wanted to kind of shine some light on that and the process. And then, can you dispute an appraisal?
So yeah, you mentioned that appraisals kill a lot of deals. They do, but the thing about that really sets one of the many things that sets Lima One apart from our competitors out there is that, again, Lima One is one of the only lender out there that we have our own construction management team. So in our operations in Greenville, South Carolina, we have a construction management team. So when our appraisal gets submitted and our budget gets submitted into our construction management team, they're going to go through that and make sure, with the best interests of that client, that they're doing the right rehab for that property. And what I mean by that is we're not going to let them over budget and create a bad loan. So we're actually going to vet each item that they do and kind of go over line by line of how they intend to get to that after repair value. And we're going to look at that and do our vetting and due diligence and say, all right, well, this person, this investor, whether the investor did it or their contractor did it, is all right, they're spot on. This is exactly what we're going to look for
Well, that's great because
Yeah.
you're looking out for their best interest as well, you know. And if it doesn't work, if the deal doesn't work, and they're getting it at a price that just doesn't make sense, I mean, you know, what better than you guys to tell them, hey,
Well,
this is not.
yeah.
I don't understand. You know, unless we're not seeing something here, but th- explain to us where you're getting this number because on our end, it's not making sense. I
Yeah,
mean,
and we have all of our systems and all of our programs that we use to kind of vet the area, vet the property, vet the comparables in the area to make sure that, I mean, the bottom line is we don't want you to over leverage yourself. We don't want you to over budget and can't sell this property or can't get the proper rents for it. So we aren't going to set you up to fail. So we have to make you successful because if you're not successful, then we're not successful.
sure.
So that's why we'll do everything to work with you to make sure that, that you're not over budgeting, you're not over rehabbing the property, and that the loan makes sense. If the loan makes sense, it's going to work for that client and then it's going to work for us. Now, there are some times where we'll look at a budget. My construction management team will look at a budget and say, you know what? We're, based on the area, based on, the comparables, you might not need X amount of dollars for this item. And then we'll make that adjustment. And then, but we always, at the end of our, I guess, a budget approval process, we'll always give that budget back to the client and say, hey, this is what we think that's going to be the best interest for you, and we kind of give them last approval. And almost every time they'll agree to it because they know that we're doing the right things to make them successful.
Absolutely.
So, but yes, now back to what you said is when appraisals can kill deals. Yes, they can. But one thing that my team is so good at is if an appraisal does come in a little bit lighter, which usually that's the reason
Sure.
for deals being to a disadvantage or killed. What we'll do is if we can, we will do everything we can to massage or restructure that loan to hopefully make sense for that borrower. So it's not necessarily a deal killer every time with us if an appraisal comes in really low, but we do give options. That's my point is we'll present that client with, hey, this is the reason that the loan is not exactly the way that you signed up for because of the appraisal coming in lower, because of the title issue, or because of this, again, out of Lima One's hands. But we'll find a way, if the deal makes sense, to present it to make it beneficial for them and us.
That's
So
perfect.
again, it's just giving options.
Yeah.
And the pillars of our company are simple. It's just communication. It's transparency. It's letting them know everything up front and just being honest.
That's the best way.
Yeah,
The best way.
absolutely.
So we're at that point right now where we're going to go ahead and mention our sponsor, our partner, Element Studios. That's EL3, MENT Studios.com. And we're here at the amazing studios of Untold Stories Recording. So go ahead and check them out. But as you were saying earlier, you are setting up the investor for success. And that really is the important distinguishing factor between your company and many other and other companies out there that are just kind of churning and burning out loans. You're making sure that investment's going to be successful.
Yes, because we want our whole goal is to make that investor successful and happy. I mean, we want them and to come back and do another loan. I mean, our ultimate goal is we want our investors and our clients and our customers, our Lima One customers, to be that. We want them to brag about our service. We want them to brag about our programs and
I like
just
that.
keep coming back for more. And I mean, I love it when I get. I mean, my clients, they're becoming friends. It's starting to be a little bit more personal too because these clients are not just. This is the one thing I love about our Lima One clients is that I've grown to notice, especially in the Chicago market here, is they're not just in it to make a buck.
Sure.
They're really, truly trying to improve communities. And I've gone out to lots of site visits, lots of areas here in Chicago where I've lent the money to these investors, to flip houses or to hold on to rentals to provide housing for people. And it's just awesome to see the transformation of some of these kind of rundown neighborhoods, and now next thing you know, there's a brand new house being built.
Yeah, they're pumping life into to things that are eyesores and just dangerous, really, sometimes to the community. So
Yes.
definitely making huge improvements. Um, Now, what are the fees associated? I mean, like upfront costs. An investor comes to you. What sort of fees can they expect upfront just to get the ball rolling?
What's great about us, what's great about Lima One is we have two fees. It's real simple. We have a processing fee of about, on most of our products, are $650.
Very reasonable.
I mean, that's it.
Reasonable.
And then we have an origination fee. And that origination fee will basically be anywhere from 1 to 3 points. Again, based on your experience, based on the size of the deal, based on the leverage. Again, we're a fee-based, company. We're going to make our money on our fees because you don't make a lot, charging interest-only
Absolutely.
loans when we know that investor's going to, sell that house in 2 to 3 months.
Absolutely.
So it's real simple. And again, I can't stress enough that we stress the transparency. Everything we do is upfront. Everything we tell a client is upfront before they even submit a loan.
Is that a origination fee built into the loan, or is that something paid even before? So it's the application and the originating fee.
Not
right
an
after that?
application fee. There's no application fee. It's a processing
Oh, I'm
fee.
sorry, processing fee.
Yeah, processing fee and origination fee, and that's in the loan.
Okay.
So really, the only thing that they pay out of pocket,
Right, that was my-
is really is the appraisal.
Okay.
And that can range. I've seen it anywhere from depending on your market in the United States, $300 to $500. It's different everywhere.
Perfect. That helps a lot of new investors budget, know exactly what they're going to need.
Mm-hmm.
Maybe at least they can get the ball started or the ball rolling today, knowing that they might have let's say they're in sales and they've got a closing coming up. For the down payment, for example, they know that at least they can come up with that $650 processing fee.
Sure.
And when it's time to close, they'll have to come up with the remainder.
Yeah,
at the time.
And again, John, everything I do when I deal with a client, I basically run preliminary numbers for them on almost every deal. So sometimes before they even go out and find a property, or before they even submit a loan, I'm running a full, what we call a term sheet for them, which basically lays out the whole loan in black and white on paper, where they'll see the loan amount, the interest payment, the ROI, their return, fees, down payment, how much money they need to bring to the table, how much they have to show in liquid assets. It's kind of the whole 9 yards. Laid out in front so that they can look at it and be like, all right, well, now on paper, this looks like a great deal. That I can work with this, or this is something that I want to take next steps on. And then once they agree to that, then it's like, all right, well, now these are the 6 or 7 docs I need from you. And then now once I get these, we'll order an appraisal, and then, we're going to close, and you're going to own that house and get working on it within 2 or 3 weeks.
So do you prefer someone to approach you before they have something under contract, so at least they are prepared and they can go out and submit contracts, offers, or do you want them to have a contract executed, ready to go?
I'll take it either way, and the difference between those two is your seasoned investors that kind of know the programs, that whether they've done business with Lima One or not, they know the space. They're the ones that'll come with a contract and say, "Hey, I have a contract and a budget.
Sure.
I'm ready to go. What's my rate and terms?" And then that's when I'll say, "All right, what do you have?" And then I'll lay it all out, and I'll say, "Yes, no," and they'll say, "Let's go." The new investors, those are the ones that like to know what they're getting into, what the terms are going to be, how much they're going to have to show, how much they're going to have to bring to the table before, and that'll help them gauge what type of property or how much to spend when they go out shopping for that property. So it depends on the investor. The answer is it depends on the investor. A new person, I love to work with them and kind of educate them and give them preliminary numbers so they can go out and find the right property that makes sense for them. Mm-hmm. And on the seasoned investors, I'll take the contract, because I know then basically when a contract and a budget, those are the two things that I need. That's a deal that can be submitted and closed in 2 to 3 weeks.
Amazing. So the new investor or anyone right now looking to acquire their first flip, just generally, what what else do they need? They need to show some reserves. Obviously, I know there's a difference between a salaried employee versus a commission-based employee, and the underwriting requirements there are going to change a little bit. But generally speaking, what sort of documents? Again, you said there were six. One of them was just an ID, and
Oh,
then maybe
yeah. So
what are the other five?
So let's just put
Just so
aside.
they're prepared.
Yeah, exactly. So let's put aside the purchase contract and rehab budget, because that's when you really have like a deal to submit. So let's just say you're getting started and you're like, all right, what do I need? Like you said, what do I need to start investing? The main thing that a lot of people might not know is that Lima One and most of the hard money lenders out there, we lend into an LLC only. So you have to have an entity set up. So we will only lend into a LLC or a corporation, or an entity has to be set up.
Great to know.
Yeah, so that is and most of the investors that come across, they know that. The very, very new people don't know that, and it's pretty easy to get. You can actually go to the state of Illinois website and apply and order a LLC. I believe it's only a couple $100. It's a really quick and easy process.
Takes a few minutes.
It's a few minutes online. I think it might take a few days or a week to actually get your documents sent to you. And again, it's a few $100. So your entity docs are going to be the main things that I'm going to ask for. The next will be the photo ID. The other thing I'm going to need is, and this is where that remember we talked earlier about the skin in the game. I'm not going to ask you for pay stubs, tax returns, commission statements, anything like that. What I will ask for are 2 months bank statements. They got to be consecutive 2 months bank statements. So let's say you had a deal to submit right now in January. I would require your bank statements for November and December. So you gotta show some that you have a little bit of money in the bank, and that money in the bank could come from your checking account, savings account. It could even come from a 401k, which will only count half.
Oh, a 401k.
Yeah, 401k will count half, but again, a 401k statement that is, we'll count that towards your liquid assets. So, and then the last thing we need is what we call an experience tracker. And it's really just it's a glorified Excel spreadsheet that we send out, and that's where we find out how experienced you are in the investment space. Now, if you're a first-time investor, never done anything, guess what? You don't have to fill it out because there's nothing to fill out.
Sure.
So that's one less document you need. So when you get into those tier 2, tier 3, up to tier 5. Those are the ones that will fill that out and list all their properties that they've purchased, sold, rehabbed, or held on for rent. So I'll recap again. It's really just your entity docs, your photo ID, 2 months bank statements, your experience tracker, which is a form that I provide you. And then the last thing is your title and insurance contact. I don't need documents. I just need your contact. Name, numbers, emails of who you're going to use for insurance, who you're going to use for title, because my team will contact them and get that straightened out with fees and clauses and all that. So
amazing. That's such a simple process.
So yeah, it's really simple. And then but again, back to the two main things. It's that purchase contract that we do require a closing date or an estimated closing date of when you want closed, and then that budget, that rehab budget, is kind of, besides next to the purchase contract, the most important thing.
Exactly.
So, again, it's a simple process.
And okay, so you close on the deal, 3 weeks. The construction budget, or I'm sorry, on the construction lending side, do you pay that out in draws?
Great question, John. Yes. So how the construction rehab or the rehab funds. So when we close a loan, let's just say you are buying a home buying a property, and your rehab budget is $50,000. So when we close that loan, we will put that $50,000 that we're going to lend you in an escrow account. And how Lima One works is on a reimbursement platform. So what that investor will have to do is basically pay for that work up front and then take the receipts and submit them into our construction management team. And they can do that online through their portal with their user ID, or they could do it through email. And then what we do is we send out, once they send us their receipts for reimbursement, we send out an inspector immediately, usually within a day, what I mean by immediately, to go out and inspect what they did, to make sure that what they did is up to code, is everything's done right, and what they reimbursed on those receipts is what they actually did for their work. And then once that's signed off and they come back to our inspector says, all right, John put in, the cabinets
20,000 or
20,000,
whatever,
everything, their receipts matched. Then we wire the money to that client's account. And so that whole process that I just kind of described, from submitting the receipts, inspector coming out, wiring the money, is on average 3 to 4 days.
Got it. Okay. Well, that's great because it also forces the borrower to be organized.
It is. Now everyone, I get this question asked a lot from my investors, is they go, well, how many times can I draw? And I'll answer them by saying, you can draw as many times as you want, but there's a caveat with that. Every time you draw funds, there is a $200 draw fee that comes out of the budget. You don't pay for that. Client doesn't pay for it direct or upfront. It comes out of the budget, and what that $200 draw fee is for is basically covers the cost of the inspector to come out. So really, when
Makes
you want to
sense.
draw, it's basically how you want to manage your cash flow and how that investor wants to manage. We have some investors that will submit receipts and reimburse every week, and then there's some that might pay for most of the rehab budget out of their own pocket, and then towards the end, or maybe once or twice, they'll submit receipts and then get a big lump sum, to avoid those draw fees. But it's really how you want to manage it.
And do you require any lien waivers or any sort of those sort of documents?
No, the only thing that we'll do is, along with the budget, I guess I fibbed. I left out, didn't fib. I left out one thing on when it comes to new construction, especially, we'll ask for a contractor bio form to be filled out. So, we make sure that all of our clients are using licensed contractors to do their rehab. But when you get into heavy rehab or new construction, we actually have a, contractor bio form that has to be completed and filled out by that contractor.
Got it.
Which we vet. So that's kind of what we need instead of what you asked for.
We're really diving deep here. I mean, this is exactly what I wanted to hear.
Yeah.
Because a lot of investors, they don't know about these loan programs, these products that exist, and they usually scratch the surface. So it's important that they understand and are prepared with these sort of tools to, when they come to you, they know exactly what to expect.
Yeah.
And that way it just starts off that relationship right off the bat in a really good, page.
Yeah, exactly. And the whole thing, you hit it on the head, John, by saying, relationship. We strive to not only create the relationship, but more of a partnership.
Absolutely.
So, I mean, we want this investor to go around, walking around town, knowing that they've got, a great lender in their back pocket, so that when they're out and about in their markets, they're almost invincible, meaning they can find or do any project that they want, knowing that they've got a great lender in their back pocket that's going to work with them to make sure that they're successful and get their deals done.
And this is also great, not just for real estate investors, but also for real estate brokers who are listening in, because this is an extra resource that you can provide to your clients, that you have a way for them to just an extra resource that you can provide to, if you're looking to step away from residential buyers and kind of move into that investor client space. This is a tool that you can basically say, hey, I've got a financial partner that would be that can lend on this sort of property type that you may be interested in.
Sure.
Um,
And actually, it's great that you just mentioned that, because I left that out earlier in one of our programs. Is which I've mentioned to you personally, is Lima One has our own broker program and our own broker platform. So to all the brokers out there, we actually have a broker team that can work with them on a daily basis and be their, lender in their back pocket, but work with them as a broker resource for their clients. So we've got brokers that will, call Lima One and work on the behalf of their clients like a typical broker, and will
Perfect.
give them all the programs and lend. And, so you can go direct, to Lima One as a broker, to help out your clients get funding. You don't have to necessarily send your clients to me direct. You can just go direct and broker your own deals through Lima One.
That's amazing, because then you have that added kind of layer where you're not just depending specifically on the loan originator to, get the documents from the buyer. Now the mercy of the deal is really on the broker, and so there's no one else to blame but themselves if
Yeah.
they can't execute or pull it off.
Yeah, and it's strictly, so just like any kind of brokerage out there, I mean, that broker is going to represent their client, and they're going to go to Lima One, get the program, and we're going to give our fee and rate, and then that broker is going to turn around to that client, and they're able to put their yield spread or their whatever they need to do to secure the deal. And then again, you're right, just work with that client and get all the documents, and they're the ones that's going to be held responsible for that speed, speed to close.
Well, kind of wrapping up here, I wanted to ask you something a little more outside of let's say this. What would you recommend right now, any new investor looking to get into real estate? What sort of advice can you give them?
That's a great question. So I go to a lot of events throughout the Chicagoland area, a lot of meetup events, a lot of networking events, and I see a lot of new investors. I don't want to use the word glomming on, but they attend a lot of these educational forums, these educational forums,
Right.
whether they're, weekly events or 2 or 3 day events. And I think that's great. It's a great resource. But if you don't have your own money as a real estate investor, or you don't have someone lending you the whole thing, and you're going to go to a bank or a lender like Lima One Capital, come to us directly, and we'll help educate you as well. One, for free, but two, we're going to help.
Right.
We're going to help you, educate you on what to do, how to structure the loan, what docs you're going to need to get the loan closed, what to do, what not to do. So use us as a resource. Plus, not only do we have the ultimate funds that you need to do your deal, but a lot of us, again, myself, that we included, that we attend a lot of these events, we network with a lot of people. So not only do I can help with, the lending, the money part, but, I have referral sources for, finding and sourcing deals. I run into at vendor fairs, I run into general contractors, I run into, cleaning services, heating and air conditioning guys. I run into everyone. So it's something that just a value add that I like to add to my clients, as just a resource. Just say, hey, I met this guy, call them. This is what when I listen to their story, that's the first thing I do with a client is I go, tell me your story. What are you trying to do? What's your end game? What's your strategy? What's your goals? And then I kind of take that and then I help fit them in the right and direct them in the right path. So again, to answer your question, come to, if you're going to need financing, come to your lender and tell them your story, and let us work with you and educate you to do the right thing and do the right loan.
And one quick one, the difference between successful and unsuccessful clients. Let's put it this way: the most successful clients that you've had, is there a specific trait that they have that kind of sets them apart? Is there anything that you can think of that is
You
it
know,
just consistency, discipline?
that's an amazing question. Gosh, I don't want to say, oh, I have to think about that for a while because I know we don't have the time. But two of the words you just said, the consistency, is a great thing. But a lot of the investors, you know, the ones that are more successful, the ones that are hungry and the ones that listen, they take what we say, to heart. They listen, they're passionate about it, what they want to do. And again, I kind of talked about it earlier. They're not just interested in making a fast buck. They're actually looking to, you know,
See it as a long term.
yeah, long term. They want to make money, of course. That's why they're doing it, but they're doing it for the long term. They want to scale. They want to do the right things to scale their portfolio, and then in the end, they really do want to, better the neighborhoods and communities that they're around. I've noticed a lot of the investors that I work with actually live in the community that they're investing in. So they've got a huge vested interest. And that also makes me as a lender really feel good about lending to them because then I know, they're really vested, in that area and that they're going to do, the right thing and the loans are going to be, successful. So.
Well, I have to say this has been an amazing program. This has been great. The amount of information that you've provided today is just outstanding. And if anyone wants to get a hold of you, what's the best way to reach you?
Oh my gosh. Obviously email and phone. I mean, those are the two best ways. My phone number is 312-433-9652. And you can call me. You can text me. In my email is my first, it's M Kozak. It's the first initial of my first name, M Kozak, MKOZAK at limaone.com. And that's LIMAONE.com. I mean, I'm always available. Again, I attend a lot of meetups and networking events throughout the city and suburbs. I'm always around. And
Awesome.
I'm mobile, so I'm always available. Again, if you want to talk more specifically about your story and about a deal, I'm always available to meet up for coffee, meet up for lunch.
For a podcast?
Always available for a podcast. Yeah, this has been so much fun. I love it. I love it.
All right. Well, awesome. Thank you so much again for coming on the show. It's been great. And looking forward to having you on again on one of the next episodes.
Yeah, I'm just call me and let me know and I'm there.
All right. Awesome. Well, thanks again. Have a great night. And thanks again to all of our audience for tuning in. If you can go ahead and you like what you heard, please subscribe to the channel. Again, that is the John Gill Podcast Show on YouTube. You can find us also on Instagram at the John Gill Podcast. And go ahead and check out our partner, Element Studio. That's EL3MENT Studios.com. They do great full-service media production. And yeah, thanks so much again.
Thank you, Jonathan.